Hi, I'm Linda Eedes from Foord Asset Management, and I'm going to be talking about the recent movements in the Rand. In September, the Rand broke through 18 Rand to the US dollar for the first time since the COVID crisis. But this time around, the Rand's weakness is less about the Rand being out of favor and more about what is finding favor with the world's investors. And that's, of course, the US dollar. Nearly every major currency, including many developed and emerging market currencies, have lost ground against the dollar this year. In July, the euro breached parity with the dollar for the first time in 20 years. And in September, the British pound reached a record low and came very close to dollar parity. So if it's any consolation, the Rand is in good company. Now, why is the dollar so strong? Well, inflation is a problem everywhere. But the US economy is in much better shape than most others. So the US Fed has been able to raise interest rates much faster to fight inflation than most other countries. It's also about a flight to safety. For many investors, the dollar feels like a safe place to hide, given rising geopolitical tension and general market turmoil. Dollar strength is negative for other economies for two main reasons. First of all, most commodities are priced in dollars. So vital commodities like oil and wheat become more expensive, which can make inflation even worse. And secondly, many emerging market governments borrow in dollars. So as the dollar strengthens, their borrowing costs increase, which means governments have less to spend on other things. In South Africa, we've also suffered the knock-on effect of rising food and energy costs, but we also export certain commodities. So for instance, we're one of the world's largest platinum group metal exporters. So that's helped to offset some of the imported inflation. And fortunately, in terms of government debt, most of our borrowing is actually in rands rather than hard currencies. But while the Fed is hiking rates and inflation is still a problem, our South African Reserve Bank has no other choice but to follow the Fed's lead, as it has done already this year, and to hike the local repo rate when the Fed raises its rates in the US. And even if this tips our economy into recession, that is still better than inflation spiraling out of control and our central bank losing their credibility. So we have no choice but to take the pain now to prevent a far worse outcome further down the line. Although it's not the case right now, we expect to go back to a situation where we have structurally higher inflation and interest rates than the US. So that means the Rand is likely to continue to steadily depreciate over time, even though there may be bouts of short-term strength along the way. And we do take advantage of those tactically, but ultimately we have to remain focused on delivering inflation-beating returns for our investors over time. So the potential for further Rand weakness is definitely something we think about and proactively manage. For those funds that allow offshore investments, where we're able to take advantage of a far wider opportunity set, that obviously helps to offset Rand weakness. But it's also worth noting that even locally, more than half the revenues generated by companies listed on the JSE is earned in foreign currencies. So even for funds focused only on the South African market, this provides a useful hedge against Rand weakness.